I see you rolling.
All right. Hello, everybody. Welcome back to Finance Junkies. And now, because I upgraded this morning, the stream should be in full HD. So the 4K camera actually matters today. Paid $164 and decided to upgrade us for the year. So we're good to go. Full HD. So if you guys want HD, make sure you click it. Today was a fun day in the markets. We had a lot of different things. Apple, which is 7.3% of the S&P 500, and I think I heard today like 11% of the Nasdaq. Or it's a pretty heavy weighting in both of those indices. Had earnings. We have to talk about them. Palantir, obviously, had some earnings. We got to talk about them. And then generally, this was the best day for the United States stock market since April of 2023. So it's been about 6 months since we've had a day like this. It's one of those days where you remember why you started investing in the first place. So let's get started with a good old friend of ours, Kris. You and I have had a journey with this friend. I just want to share this photo of Christopher Patel and I at Mr. Jeremy's house. One of these guys loves Alex Karp. The other guy doesn't like Alex Karp. But both of these guys are going to make a fuck ton of money off TFC. Now, that's a conversation for a little bit later. Nonetheless, Palantir up 20% on the day. Not a bad earnings. Kris, let's start with you. What were your raw thoughts when you saw the numbers?
Complete fucking bullshit, dude. The numbers were like okay. It weren't great numbers, but apparently when everyone's already thinking Lizzo's going to show up and fucking Nicki Minaj shows up, everyone's happy. So that's pretty much what happened. Palantir, I guess, last time the revenue numbers were so shitty that everyone kind of expected that this quarter's numbers would be shitty too, and it didn't turn out that way. So, I think there'll be a pullback.
Unfortunately, it's up 20%.
I know. I mean, they got lucky too because they reported on a day that like the entire market was in an upswing. So I don't necessarily give them all the due props that they deserve. I mean, I'll give it to you guys as shareholders for like hanging on and keeping the faith with Father Karp, but I lost that faith a long time ago. We'll see what happens.
Cool. So in terms of the actual numbers for people that want to know, 558 million in revenue, we beat by about 2 million. 3 cents of GAAP profits, we beat expectations of profitability by 2 cents. And the earnings call, as someone who listened to it, was just really good. For all the Palantir investors that are in the chat, we know that the biggest bull case for Palantir throughout the next at least 2 years is them scaling this AIP platform, which is just a fancy platform that wraps up LLMs and makes your business more effective because then businesses can use proprietary data to get better business intelligence. I'm simplifying it, but it is actually a big deal when you look at some of the use cases of it. They are doing boot camps, which is their go-to-market strategy, at a hypersonic scale. I mean, they're doing 70 boot camps this month. These boot camps have 5-6 potential customers each in the boot camps, and they barely did 70 pilots all of last year. So one of the biggest critiques Kris and I had throughout 2022 was that their sales and distribution sucks, even though we know they have one of the most phenomenal products out in the market. And it seems like if you're a Palantir investor, the tide is changing in regards to their ability to actually go to market is not only working, but it seems like it's on a real exponential trajectory if you're doing 70 boot camps in 1 month. Now, we don't know the conversion on that. We don't know what the clientele ratio is in terms of how many people they're actually adopting to sign up for AIP and pay revenue. But we are seeing signs of life in the company in terms of getting customers in the door, showing them a product, giving it to them for free if they like it. We have data engineers saying, hey, we're building stuff in 8 hours. We couldn't build in 8 months because of Palantir's help. And then hopefully eventually converting it. So Kris, I just want to get your thoughts on, do you have any faith in their new go-to-market strategy that would get you interested in buying the stock?
I'm not going to buy the stock right now because the valuation is just crazy. But in terms of like business going forward, I think they're trending in the right direction. Sometimes I feel like they actually listen to us on the Palantir Weekly podcast. Because when we were talking about it for the longest time, remember we were saying like they need to do more events. They need to do more of these workshops so that people can not only understand the product, but they can actually like interact with it. And I think the conversions are good. So some of this, I think, is directly tied to them hiring guys like Coach Strap and whatnot to say like, look, regardless of how you feel about your software, like, oh my God, it's the greatest thing on the planet. Well, if no one knows how to use it, no one knows what it looks like, you can't exactly make a sale, right? So the way that I would structure this thesis now with Palantir is that it's their market to lose. So if this is a great product, they need to show it off. They need to get as many people in the door as possible to learn about it, and then go from there and see what the growth rate looks like going forward. But in terms of valuation, I'm still not sold yet. Maybe if there is a pullback, but I will say this: I have adjusted my price of entry from like
Okay, so
$8.
what's the new price? Because before you wanted it at $8, $9.
12. I'd say 12. 12 would be a good price, yeah. So I think the bare minimum that I would be willing to pay for it is probably 12.
That's progress. That means you're willing to pay a couple extra billion in market cap for the company.
Yeah. No, it's quite a bit more, you know. So
To be fair though, when it gets to $12, you'll probably adjust that price target even.
no,
your entry point
it
lower.
depends. I see, the thing is, that's the mistake that so many people make when it comes to me, is like, I don't just base my price targets on just like, oh, look, the stock is down, which means I'm going to lower my price target. If it goes up, I'm going to increase my price target. No, that's not how I work. I look at fundamentals. I look at how much the numbers make sense. And then at the same time, how is the business actually progressing? And then I base my calculations based on that, you know? So like when it came to the ENVX story, I was, I had to keep readjusting my valuations lower and lower, because at the same time, interest rates were going higher and higher. Was I the one that caused the interest rates to go to 5.25% in 5 months? No,
No, it wasn't that. It was just when it was, I don't know, 200 something. It's like a 150 is a good target, or 130, and then it got lower and lower. Now we're at 70. Now we're at $75. Now we're like less than half of whatever the valuation was that you said was they said you would buy in. I'm not. Look, I'm a little.
No, I know.
It's fine.
But I know. I'm just saying the fundamentals in the macro have changed also. So it's not one of those things where it's like me having some kind of personal vendetta against a company or whatnot. It's more or less just, what does the macro picture look like? How's the business performing? If the business is doing good, I'm all for it. I'm with you guys. If the business is not doing good and they're trending in the wrong direction, I'll be the first one to get out. I'm not going to sit around and, and drink the hopium with you guys. So, yep.
Okay. No, it's fine. I'm just teasing. I've been buying. You're muted, Amit.
Sorry, I was saying, any thoughts on Palantir? I know you might have slept the whole day and not really heard.
I did. I was just taking a look at it. No, I haven't had a chance to dive into the numbers, but I agree with Chris that the valuation is starting to get a bit rich, and I think we are going to need some sort of a pullback to normal, even if it trades higher and it's given like a bit of a premium. I still think it's getting a bit rich.
Yeah, I mean, I think the big thing is last week. So today it went up to 18, right? I think it's at like 1780 after hours. When it got to 18 last week, that was off nothing, right? It was just off Israel, right? And like that didn't make sense to give it a $40 billion valuation for that. This time, with the customer count growth 45% year over year, beat on revenue, S&P 500 around the corner. Like, I don't know if 18 is overvalued or undervalued, but it definitely, this 20% jump in the day feels like it was justified to an extent. Maybe it pulls back, like anything could pull back, but it wasn't a random 20% boost. And I think
when would they get included to the S&P?
Like, I don't know the technicalities on it, but they're fully eligible. So I think it would be June 2024. In the next 6-8 months, they got to go through the process of registering and all that stuff. But that's going to happen, and people, invest. And I don't think that's the reason the stock is up, right? I mean, investors will have plenty of opportunities to add.
No, but it's usually rare that further than a quarter out, you have some idea of a positive catalyst on the horizon, right? So that is something that people are positioning their portfolios for that. I'm just curious how many quarters out, because I think it was 6. We needed 6 in a row. We've had 3, right? It's like 3 more quarters.
No. They're ready. They only needed 4 in a row, and they did all 4. So they're good to go. Okay. Like, they're eligible now. Today,
right? Okay, but it could still be a couple. It could still be a couple quarters before it actually happens. Okay, good. That's good. That's
before
cool.
It happens, correct?
I'll be ready. If we get another flash bump up, that might be when I sell some more.
Okay, so I think that's most of the stuff on Palantir. I guess the only other thing I want to say is they were very steadfast with their commitment to Israel. So if you looked at the earnings call or looked at their presentation, Corp was like, look, we stand with Israel. We don't care, right? This was a terrorist attack. We stand with the democracy. Sham basically hinted that they're supplying the Israeli government different services. He didn't get too super specific about it. So that is something for Palantir investors to be aware of going into the future. I don't know what it means in the context of revenue growth or anything like that in the future, but if this thing continues, then there might be some opportunities for Palantir to really play a meaningful role in helping Israel.
That was a really smart PR move on their part. I mean, I'm sure that there's Western democracy and all that stuff there too, but the PR move around actively supporting Israel is probably going to look favorable to a lot of investors, who are Jewish, because that's one of the major themes that Palantir's been accused of in the past, that they're anti-Semitic because of their affiliation with Peter Thiel and all this other stuff, and it's completely ridiculous in my opinion, but it is what it is. So I think them supporting Israel can have some blowback in maybe some of the Middle Eastern countries, maybe not wanting to do business with them in the future, but at the same time, there's a lot of businesses that are primarily like on Israel's side unofficially that may end up, contracting with Palantir, because a lot of these hedge fund managers may end up pushing Palantir as a how do I say this, as a tool. That's what one of the consequences of being neutral is, that no one's going to give you that additional favoritism. Whereas if you take a side, you will lose some people, but you'll also gain a few people too. So.
Correct. And the last thing I'll say here is one thing to really understand for everyone in the chat. This is the biggest takeaway I got from their go-to-market strategy. As a SaaS company, like once you make the software, you need to sell it. And the beautiful thing about Palantir is that they're such a product-driven company that they think they have the best products in the world. By the way, their average revenue per employee was up from like 292,000 in 2019 to 588,000 now. So like they're hiring some of the best engineers in the world, really doing an amazing job building product. Snowflake, Databricks, etc. In the past 6 months, they've acquired multiple companies. Databricks acquired a company for 1.3 billion. Snowflake acquired a company for 150 million. And so what I'm seeing in the SaaS space is a lot of these bigger names that have a much hefty premium than Palantir, even though Databricks is on the private market. They're acquiring companies, and they're trying to acquire those companies to build out their ultimate AI enterprise products. Palantir is A, not acquiring any company. They're doing this shit themselves because they hire the best engineers in the world, because they get those engineers to join the company. And then B, they're having a go-to-market that is not stalking someone on LinkedIn and trying to call them, or or doing some type of targeted advertising to some CTO. They are saying, hey, come to the boot camp. You're going to build something in 8 hours on your data with our software. If you like it, you can keep the damn thing for free for the next 6 months. And if you really like it, then you can pay us. And I don't think I've seen a software company go to market like that in my history of studying software companies. Now, I'm not the smartest guy studying software companies in the world, right? So maybe there's some anomalies here and there, but I have not seen.
I'm glad you said that, because you're absolutely wrong. But I'm glad you said that. Well, you're absolutely wrong, but okay.
Well, here's the question, right? Does Snowflake do boot camps with potential clients?
Yes.
Well, but then why are they spending 70% of their revenue on sales and marketing? I mean, a lot of the stock-based compensation is going to salespeople.
But that's how you do sales. What do you think that expense is for? You think they're just spending it on ads on TV? No, that's how you do. That's what sales and marketing budgets come from. The point is,
so you're saying Snowflake is hosting boot camps across the country.
Yes.
How do you know that? Like I've never saw that in their marketing.
Well, you don't really search. You don't do the DD on them, so you wouldn't know. But all Palantir is doing right now is doing everything that the other software vendors already do. That was the criticism that me, Coach Strap, and a lot of the guys had, is they did not follow that route. Sometimes if an industry works in a certain way, it works a certain way for that reason. So that's what you need to do. And the fact that they didn't want to do that is what hobbled them. But now they're getting in on the game. That's all. They trust me. They do. Databricks, Snowflake, all software vendors, they have multiple workshops across the country all the time that highlight their products. They have demos. They'll even send you specifically to like training events. So it's not like Palantir just somehow figured this out all of a sudden. No. So just want to clarify.
So I agree with that, but I'm not sure that those companies are taking the proprietary data from the clients they're working with and then building them specific use cases with products within those workshops. I mean, showing them a product and then building them an actual proof of concept and then letting them keep it and then use it. I don't know. Maybe it's a little bit different. I could be wrong on that. But from what I'm seeing in these boot camps and seeing the growth from the clientele on those boot camps and what the actual people at the boot camps are saying is that this is a go-to-market that is different because a lot of the products that they're getting to build in tandem with Palantir software that, again, is just hard stuff to build is being done quickly. And I guess, like, you're probably right that a lot of these software companies do these types of workshops. To me, it's one of those things where they don't have to actually take out these clients to dinner, right? In the terms of the proverbial term that Carp says, they get to actually show them what the use case is, and then potentially show them that it can actually work.
You're muted, Chris.
Chris, you're muted.
This is what a typical workshop actually looks like.
Everyone, a second to get there.
So like they can do it over Zoom and everything else, where they actually show the product, send them the stuff. It's not as, like I said, Palantir didn't just discover the sales model. I just want to clarify that, because the fact that you said that makes me kind of like a little bit like perturbed, because this is the tried and true model of trying to actually do sales when it comes to SaaS. This is the chief criticism that I had with Palantir in the past. They are correcting that. That's why one of the reasons why I'm giving them a higher valuation. If they keep the growth rate and if their product is really that superior, then guess what? Their conversion rates are going to be really high.
Yeah, but Chris, I think you're right, but I think there are two nuances here. I think in a lot of those Zoom things that you just showed me, they're demos. They're like, hey, here's how this works. Again, I spoke to one of the Palantir employees, Mateo. He's public on Twitter about the bootcamp. Mateo was presenting to high-level C-suite executives their data. Imagine it's like a car company, their automotive supply chain data within Palantir's AIP terminal, within one subsidiary of the terminal, because it's very big. It has a bunch of different sections, presenting how to use it, what it looks like, and then letting those people actually work with it on the spot with their hands, right? In Chicago and New Orleans, they're hosting all these boot camps. I don't know if a lot of these software companies are doing exactly that when it comes to the workshops, in terms of real data, real work, real use cases, and then at their face.
I would caution you against assuming that. I'd ask someone like Coach Strap how the actual sales process of SaaS works, because you're really mistaken if you think that other companies are not doing the same, if not more than that. So, just letting you know. And what I just showed you guys was just an online.
But why is Snowflake spending 70% of sales and marketing if they're doing this? Because you shouldn't be spending that much of your revenue on this.
Well, first of all, you may want to double check how much they're actually spending on sales and marketing. It's not 70%, right? There's way more.
It was that in Q2. It might be 65.
No. It's. I'd say you take a second look. Take a second look.
Yeah. Well, regardless, it seems like these boot camp. No,
so
it's
the debate here is that whether or not Snowflake is spending Snowflake's advertising budget includes like these sort of workshops where people get to test drive the software on their own data versus like just product demos, and whether or not
so like look at these two. Yeah, look at these two comments, right? So we have Prakash here. I've been to Snowflake workshops. It's pre-configured demos. This is what I thought. And then you have Snowflake has tried to, what was here? I'm with Amit. There's no way Snowflake is offering the client value that Palantir does. I think Chris could be right on. These companies are offering workshops and boot camps. I don't know if it's the client value within those 8 hours that they're spending. I don't even know if they're spending 8 hours with them to build a highly customized product. And if they are, then they are. Then I'm wrong. But if they're not, then maybe this go-to-market is a little bit differentiated. And
well, the main thing is Snowflake. It doesn't take a lot to get started with Snowflake and actually adopt Snowflake. That's one of the things. Whereas Palantir is a lot more like client-centric. We actually need to send engineers and all the other stuff to them, right? So I'm not exactly sure 100% what the training looks like when they actually send these people, but like I said, it's something that you'd probably have to ask someone like Coach Strap. Maybe they can give you a more detailed answer on how the sales channels differ between Palantir and Snowflake. But I would honestly say that the number of clients that Palantir gains in terms of conversion is going to be the real key test, whether or not it's a successful thing or not.
Yeah, agreed. Guys, sorry, I think it's my end. The internet is like it's really laggy, but I'm keeping up the best I can.
Seems okay over here.
Okay. Yeah, it's like a weird little lag. But I guess at the end of the day, that is what we have to investigate as the chat. Like, what is the real value of these boot camps as Palantir shareholders? Because what I'm understanding is and again, I've talked to a Palantir employee conducting these boot camps, and the type of value he's describing the clients are getting, or potential clients, is immense. And it seems like as a product-driven company, a product-driven sales approach is just like a phenomenal way for them to sell the damn thing. Because last year, I mean, you can't sell it if you're not showing off the product, and if you're so product focused and you don't have a sales culture like a Salesforce or like a Snowflake, you're just not going to sell, which is why we got a lot of shitty growth. So maybe this is an inflection point in terms of them scaling the go-to-market. But ultimately, Chris is right. It depends on client conversion at the end of the day, and then we'll have to see. Last question, Chris, on you, and then we'll move on to Apple. You don't like the valuation at 38 billion. Why are you not a fan of the valuation?
I mean, okay, so let's do the math real quick. They're generating what, 558 million in revenue, and among that, what's their operating income that they're generating? And then give it a fair multiple, like even the most extended multiple, it's overvalued compared to any other SaaS product out in the market that has the same metrics. And on top of it, layer in the growth, which is reaccelerating, which is why they should get a little bit of a premium, but not the crazy premium that it currently trades at.
What is the net revenue? Remember when we spoke to Jeremy? He was like, that is the metric that he looks at, the net revenue. I'm sure we can look at that on the visual stocks. That's what I'm looking for right now.
You mean the net income?
Yeah. Remember when I asked him last time we spoke to him, I said, what is that the one metric that you use, like the true metric that you
net
use?
Income,
yes.
It was
like net income.
It was 72 million this quarter.
72 million this quarter. And what was it last quarter?
Last quarter was about 40 million. And a lot of that is from treasury bills as well. So we have billions in cash that we're getting T-bills off that. So I think, yeah, I mean, like, obviously the market gave it a big premium today on that 20%, but it's also retail heavy. People are excited about the company. And, these are one of those companies that's always going to be quote unquote overvalued to some extent. It's a question of how much you're actually willing to pay.
But that's the key. Like, how much overvaluation are you willing to accept to be in it? Because what Tevis said on his video was absolutely correct, in my opinion, which is the future growth has already been baked into the share price, and now it's even more. So, I mean, you want to hold Palantir at $18, $19, that's fine, but a lot of that growth is baked in. So I would say it deserves an $18 valuation in maybe 2025. So all you're doing is moving forward the goalpost a lot. So it just means that you're probably sitting on dead money until the metrics start to really ramp up and get to a more like traditional level. So
here we go. I got it here. I'm really starting to like this site. Here we go.
Okay. Are you sure he updated everything today?
I don't know. Let's find out. Well, Q1 2023 is what we're looking at. Q1. No, I don't think it's. Oh, there it is. Q2.
No, he didn't update. Yeah. We can't use these. He didn't update them today. He only has Q2.
That's million. That's okay. 30.
But they are positive. They have 70 million now, which is a good
thing. That's all you want to see, just a little sliver up here. Cash flow, operating expense.
Okay, I'm going to move on to the other big one for the day, Apple. So this is Carlos. You're probably seeing this for the first time. This is your company, the one you've loved for a very long time.
I've been reading. I was just looking at that.
Has it down after hours. Yeah, you were looking at it yourself, right?
I'm reading.
EPS 146 versus 139. Revenue 89.5 billion versus 89.28. So they beat on revenue. iPhone revenue 43 came in line. Mac shit the bed. Sold 7.6 billion worth of Mac versus 8.63 billion. So that one was bad. iPad revenue was okay. Wearables also was down. Services was a little bit of a beat. Gross margin was a little bit of a beat. China revenue, they expected 17 billion, came in at 15 billion. So Mac, wearables, and China is what really came down. And that's why the street was not excited for Apple. Let's start with Chris, then Carlos. Chris, any thoughts on if Apple deserves to be down after hours?
I mean, it's a big vulnerability for Apple to be so heavily invested in China. So a lot of their revenues comes from there and everything. So, but more importantly, the valuation in terms of like future growth is also another problem for these guys. You look at the year-over-year growth is pretty flat. I mean, the only major thing is there's still a cash flow monster. So in terms of EPS, these guys are just buying back so many shares that it'll float their stock price, and keep it pretty steady. But in terms of like additional value, I don't see it. So I would rather just so at this point with Apple, I think it's fairly valued. It's not undervalued, which means that in terms of investing, it's probably not a good idea to be in Apple.
Carlos, were you happy with these numbers, or this sucker's overvalued? What do you think?
I'm long-term. Oh, sorry. Am I? I'm long-term bullish on them. I actually have been really wanting to restart and build a position in them. It's just there's too many other companies that I'm trying to accumulate massive share counts in. It's a crazy time for me right now. This is one of those times I just really wish I had more capital to deploy. But I think short term it's going to be bearish for them. They're fighting a narrative. Are they still a growth company, or are they a value company, right? And this is why I think honestly a lot of it's hinged on the Vision Pro. The Vision Pro is either going to be the next level of the growth story, or they could plateau. But I mean, if you've been holding shares, it's a good time to be in Apple. Like Chris is saying, they're going to be doing a lot of buybacks, so you'll see some appreciation that way. But yeah, I'm just sort of, if I was an analyst, I would be neutral on Apple right now. Can you share the screen here?
Yeah.
I'm just looking at some of their metrics here. I mean, the revenue is insane. The amount of money that this company is able to print is absolutely ridiculous. I would really want to know what they are doing with all of that revenue. The cash flow, the free cash flow. What do we got here?
Yeah, I think the other thing about Apple,
the billions of dollars that this company just continues to print. A lot of, I don't know if they have it broken down by services or hardware sales.
As TJ said, they're just so big, and the street's expecting 122 billion in revenue for Q4.
Right. Expecting, I mean, that is a fuck ton of money. Yeah, TJ's got it right. It's just so damn hard to keep growing when you're a company that's that big. It's true. It's just massive. It's like everyone that's wanted an iPhone. Whose iPhone, the iPhone 15, how many people was that their first iPhone? Really ask yourself that. How many people didn't, that have wanted an iPhone, don't have an iPhone already, or an iPad? I mean, how many iPads do you have in your house? I got like 5 of these things sitting around. Like, who are you selling these iPads to?
Well, the problem with Apple right now is that they've hit peak. I think we've hit peak sales in terms of like total cell phones, right? So right now the cell phones are lasting longer and longer, right? So there's the replacement cycle is not nearly as crazy as it was back in the day. So a lot of this is true. Like I went to the mall this weekend and Apple stores were still packed. I agree, Heinze. Every time you go, it's packed. The thing is though, there is a point at which the additional growth is going to be very hard for Apple to do without moving into second category. So if you look at, sorry, can you put that screen back up, Amit? So if you look at Apple, they've actually historically traded at a much lower PE than people really want to believe. And I had to actually look at this again just to double check. If you look at their PE ratios, this actually has been in the teens for the longest time, primarily because their growth wasn't exactly like stupendous. But the major difference is some of the peripherals that they came up with, the Apple Watch, the AirPods, bro. The AirPods themselves are one of the most profitable things on the planet for Apple. The key is, are they creating any more category killers that are out there that are going to boost up their revenue without cannibalizing their already existing, hold on the consumer? So as an example, that's why they're doing this Apple Vision Pro. They want to make this a mainstream product, so this way they can get way more money, right? That's a new source of revenue. They haven't had that many new sources of revenue in the last couple of years. So outside of subscription revenue, which by the way, if you look at the numbers, the subscription revenue has been like crazy. That's been growing, pretty well. So services business for Apple has been growing. There's another vulnerability that Apple may end up facing some headwinds on, and that is from Google, because the current antitrust situation with Google is that right now Google is paying billions upon billions of dollars to Apple in order to use Google as a default search engine, right? Now, if legislation comes out, let's say Google gets penalized and say you can't do that anymore, that's going to cut Apple off from like billions upon billions of dollars of free money that Apple has been pretty much receiving from Google. So that's, like I said, so a lot of people are looking at Google saying, oh, what if they get declared a monopoly? What's going to happen? Well, And believe it or not, the one that's going to be affected the most is not Google. It's going to be Apple, which right now, from estimates, I think it's between 10 and $20 billion of cash flow that that Apple is getting right now from Google for just being a default browser. So it's literally costing Apple nothing, and they're getting billions upon billions of dollars. So imagine losing that kind of revenue because of one court case. You know,
I mean, talk to Meta about that. That's happened to them, not court case, but they do lose money like that. So eventually, that would just get repriced in. But I think there's some good comments there in the chat. Heinze,
guys, I'm sorry, guys. My Wi-Fi is it's so bad, like it's breaking up so badly. So I'm gonna.
Can you make it on StreamYard? Can you make someone else a host? Can I become host so I can pull up some of these?
Dude,
chats?
no, I need to email these guys and be like, for goodness sakes, can you let us?
Why don't you turn once you turn your speed down to like not the 4K, turn it to 720p or something.
Yeah, I'll do that. Maybe that helps.
That could be.
Tell your mom to get off the telenovela watching right now.
Well, if you're on a Mac, you could.
Dude, I think that fixed it. Hold on, I think that fixed it. Are we good? Yes, good.
Yeah. So, sometimes
that's
what
fucking
you're
720. I paid $160 for that shit, and they gutted the connection. Wow.
Well, if you have a shitty internet connection, it's not really their fault, is it?
But it's also.
Dude, I need some Verizon, right, Chris? I need some Verizon.
You need
Right,
some
you need some
Verizon
Verizon
in your life.
The other thing is what you might be seeing as an internet problem is actually your CPU's overloaded. Your CPU could be slow. That's why you got to open the activity monitor always, and it'll tell you where the performance problems are happening.
Amit, get a MacBook. Amit, get a MacBook. Trust me,
these things are like $1,000, $2,000. These MacBook Airs, they're awesome.
Bro, your computer sucks, dude. The one you bought, it looks nice, but it's horrible. Like you need a Mac.
Intel.
What is that? The one that had it had the one that had the missing key. The one in Vegas
okay.
that had the missing key.
Yes,
Come
it has
on,
the
man.
missing keys, but like
ghetto, man. Just ghetto operations.
So ghetto. Look at him. Look at his old ass PC, and he actually spent some decent money on it. The thing is always making Carlos. The thing is like always overheating. It's always making sounds. Bro.
I know a bunch of my friends when making the case against buying Apple, they're like, look at the power of those the 17-inch gaming PCs. Those things are you can fry an egg on them. You can't really put them on your lap, and you have these overheating issues. Yeah. After all the bad thesis, right?
This is hilarious.
Just buy a MacBook. It just works, man. Battery lasts forever. Works great. Screen's awesome. Like, anyway, I'll just
let's
read some of these. I just want to read some of these comments. Heinze 432 at Chris. Yes, they do need to create that next big thing. I think the comment that you were making, Chris, about Apple needing, say, a new greener pastures to grow, that's the same thing with all companies. This is an argument that AMIT sometimes makes, and I don't necessarily think it's true, but in this case, it might be true. Like, that's a problem for all companies. We now have the phones, right? We've gotten that. We've got the watches. That is now, we understand that is now a market. The AirPods, they are gangbusters. Everybody's got them. They're an awesome product. But at a certain point, like what else? What is next? What is the next area of innovation that you can create a new product around? And I think that would be the Vision Pro. I'm getting more and more bullish on this device coming out, and I'm probably as soon as I can actually pre-order one, I'm going to get that first generation one. And
so
I'm going to be the guinea pig. I'm buying that thing.
One quick thing with investing in companies, just because you like the product doesn't mean that there's a good business case to overpay for the valuation of that product either. Like, I love MacBooks. I love the Apple ecosystem. I have an Apple iWatch. I have AirPods. I have everything you could think of when it comes to Apple. But the share price is really high. And the business going forward is really, really hard for me to justify. So just because you like a product doesn't necessarily mean that that's an investable business. I think a lot of times people get confused by that, where they say, oh, I really like this product, which means that automatically this company is going to do exceptionally well. And that's not necessarily always the case.
Yes, but I think that the people investing in Apple, like the people buying shares today, or even me, if I'm buying shares in Apple today, I'm buying them for a different reason that I was buying them 10, 15 years ago. I'm not seeing them as a growth company. Personally, me, I don't care what they call themselves. I'm seeing them as a store of value because that market cap is so damn high. And I'm seeing them as a somewhat consistent return, whether it's through buybacks or the tiny dividend that they pay me. I'm seeing it as more like a safe investment to hold a lot of capital, right? I'm not trying to throw $2,000 or $3,000 into Apple. you're trying to throw $10, $20, $30,000 into Apple and get somewhat predictable returns and save protection on the downside. That's what I would be buying them for. And I would just expect that they keep up with the product cycles and keep monetizing or finding ways of squeezing some more revenue out of people on the services side to justify the valuation and a slight bump up every year. That's what I would be buying them for. With the Vision Pro, I do think that there's a chance there to move to yet another leg up, in which case, once that market is saturated, we rinse and repeat till there's another new product. So that would be my case on Apple.
Yeah, I mean, I just think right now Apple is valued like a growth company, and clearly it's not growth company. I mean, it's like a pseudo growth company in my opinion. It's you'd have to really like do some mental gymnastics to think Apple is a growth company at the current rate that they're growing, right? So I wouldn't want to give them that kind of valuation. Now, if Apple was, let's say, $130, hey, Kris Patel, the vulture is, but not right now.
Yeah. I mean, it's yeah. I had a couple of call options that I bought going into the announcement for the Vision Pro, and it was the same thing. You ride it from 170 to 180, back up and down, back up and down. That's what I would be doing now. Until I have the positions built out in the other companies that have been absolutely smashed. I'm not looking to jump into Apple right now.
Let's transition to the broader markets and
discuss. Oh, you're not going to address TJ giving you $5 so you could get a goddamn new laptop? We need to start a new fund for Amit. By the way, thank you, Amit, for paying for hibachi for everyone that night. You know, that was nice.
Dude, no, I'm still collecting some money, bro. I got to collect the money back. I put it on a credit card. I don't have that money.
I'm sorry I missed that. Man. I always love this.
What are you talking about, bro? Palantir's up today. You got it covered. Come on, man.
But he ain't selling. He's not selling. Have you ever sold Palantir?
I'm not fucking selling.
Have you ever?
I sold a couple shares here and there, but
you're diamond handsing it.
Yeah, I mean, dude, I've can you guys hear me? Yes. Yeah, I've said 2030. I want that shit to be $250 and to look at my buys at $6 and $7 and you know, I want it like I want that feeling. Kris will never have that feeling because Kris can't hold on to a stock more than fuck. I don't know how he has a wife for fucking 4 years, but like I will hold this motherfucker.
Because he's sold a bunch of long puts and calls on his wife, so he's holding on and just making that premium. He's like, and the premium comes in like sandwiches and drinks every day, you know.
It's true.
Collecting
the dividend, my dividend.
He's collecting the dividend money.
She's picking me up dinner tonight.
As soon as it's a busted growth story, who knows? Kris will just swap it out.
Oh my gosh, that's hilarious. Okay, so S&P 500 was green. This is the best day since April. We look at everything that's green. Carla should be smiling because Meta was a little red, but everything else was green.
Poor Meta.
10-year went down from 4.9 to 4.6. One of the most dramatic decreases we've seen in the past couple of weeks. Kris, why is the market mooning?
I think it's like we discussed yesterday, right? The bearish sentiment around most of this market is pretty much out there. So any sort of positivity can really boost the share prices of a lot of companies. So if you look at the valuations on a lot of companies that don't deserve to be valued at what they are, they rode up today, especially among the companies that I've been following that have strong cash flows, who've been beaten down for no reason. Some of them have actually, because they have high leverage, but still have strong cash flow. So I think right now what we're seeing is a chase of opportunity going into 2024, thinking, hey, if the Fed is actually signaling out that they're going to be lowering interest rates, I need to get in on this before everyone else does. So the market is always forward looking. And so the comments yesterday by Powell really like set the tone for a lot of people in saying, hey, I think we're actually done with this rate hiking cycle. So I don't want to miss out on this giant rally. So a lot of people were buying into it today. The part that I did not like was that there was a lot of crappy companies that had a lot of movements up as well. I'm not talking about Palantir, by the way. I'm actually talking about legitimately shitty companies that basically don't actually produce much value. And so they were catching bids all day today. And I wasn't a big fan of that. But other than that, a lot of great companies who are generating tremendous amount of cash flow, especially in the REIT sector, who have tons of debt. There is a silver lining on the other side, considering that if interest rates go down, they will be bought up. The other thing is, I don't know if you guys saw the regional banks today. They were just on fire. Most regional banks that I've been following were up like between 5 and 10%, and the KRE was up.
TFC, baby.
Yeah, TFC was up. But that just goes to show that a lot of money on the sidelines is just waiting to get in. So any chance that we see an improvement in this market in terms of valuation on the interest rate side will boost their valuation. So some of them are trading in like the single digit PEs, which makes no sense considering how strong their cash flows are. So just a thought. And same thing with like trading under book. A lot of these businesses that have strong cash flows and they're trading under book value, which makes no sense whatsoever. But what are you gonna do?
Another little stock of ours.
I mean,
sorry, go ahead.
Let's do one little thing on the macro, then we'll go to, I know what you're about to transition to, Carlos, what you said in the group chat. Chris, why do you think the 10-year is coming down? Is it because Jerome Powell paused rates and the markets are like, all right, we're good to go, and like we're setting up for that end of year rally? Or is there another reason you think the 10-year is starting to inch down? Because
the inflation narrative is dead, man. I mean, look around the world. Inflation is coming down really, really fast. So whatever the assumption was that that inflation would keep rising is starting to kind of dissipate. And because of that, the projections that rate cuts are coming our way are becoming more and more clear, which means that you want to get ahead of the market. You don't want to be behind it. The other thing is a lot of people have been calling for a recession in Q1, Q2. I'm going to be watching like a hawk to see if there's any sort of credit event that comes our way, because the only thing that can push us into a recession, in my opinion, right now, with just how strong the labor market is a credit event like we saw in 2007-8, where we had that great financial crisis. Same thing with the regional banking crisis that we saw earlier in 22. A lot of those structural reforms have already been made. So I'm assuming right now in a no recession scenario. But that doesn't mean that if a credit event happens that we can't tell, or a geopolitical event that happens that we can't tell, that wouldn't push us into a bad position. So just FYI.
I was going to just say that I want to just echo what you were saying. I think the reason why we're seeing a bump in the markets today is that there is a bit of pent up buying pressure that just needed some sort of catalyst to get back in there. Even for me, and I'm seeing this. I was actually going to comment this when we first got on the chat. I am seeing a lot more responsible investing lately. I don't know if you're seeing this from your own friends.
What do you mean by that?
Well, even from some of my friends that are that started investing in 2020, right? When it started really getting into it and following the markets. Every time I was getting more calls on up days than down days. And now I'm getting a lot more calls on down days from friends being like, hey, this has come down. I'm trying to increase my position, or like, what are you doing today? Which is telling me that now they're looking and they're seeing the red days as buying opportunities instead of the green days as like celebration, right? Now no one's celebrating the green days because they want those red days to be able to buy. And so I think that just overall, we are now, I'm saying, a lot more responsible investing. On the red days, you're supposed to be looking for the deals. Which companies have been smashed more? Which companies look like they're going to have a better trajectory in the next 12 to 18 months? So you have less time to invest, right? You have less time to get in at these prices now. And so I think today is an example of that. There was a bit of this pent up pressure. And if you're getting any idea, like, hey, even if it's 6 months to a year from now, when they're going to start to actually lower rates, I mean, do you have all the shares that you want in all these companies? This is the time to be buying. So it's promising. I think a year from now, a lot of people are going to be making a lot of money. Smart. It's smart to see. I like to see that.
Real quick, please like the stream. 77 likes with 461 people. Appreciate you guys. If you would like to screen and subscribe, that would mean the world to us.
Let's do a 5-second
Carlos,
pause. Everyone hits like and subscribe. We'll do a 5. Just take a moment of silence for the like button.
5. People. Yeah. So in these 5 seconds, let's all acknowledge how good this shirt looks and how it's accentuating my muscles.
And how puffy that chest is. How puffy that chest is. It's stretched out.
Dude, so I was at Kohl's, right, buying shirts, right? And I texted my good friend Kelly. I was like, "Which do you think these shirts look nice or not?" And she was like, and I texted her a picture in the medium and the small. And I was like, the medium it fits, right? But small is like it fits. And she was like, "Get small." And I was like, "But I've worn a medium for the past like 8 years." And she was like, "Well, you lost a lot of weight, right?" I was like, "Yes." Yeah. So like, "You got to go small." And so now I'm small. I'm officially small, and it's very tight and it's nice. And I'm gonna reorder my wardrobe and just be small. And I literally can't gain weight anymore, or else I'm gonna waste a lot of money on these shirts. Okay, no one cared about that story, but I think it looks nice. All right, so now that the story's done, hope you guys like and subscribe.
I went to Kohl's to buy shirts.
Dude, there's a brand called Apartment 9. This is a very good brand.
I get it.
APT 9. This is a great brand. It's cheap and it's good. It's a good brand.
I think I started telling you this story in on our way to Walgreens. I'm gonna make a referral to you for your wardrobe when we get off air. I'm gonna connect you with somebody.
You guys remember?
Hold on, no. I don't care who you connect. I'm not paying more than $25 for a shirt. Let me just put that.
We'll talk offline.
No, I don't care what we're talking about offline. I am not paying more than $25 for a shirt.
You don't have to. Thing is, you don't have to pay $25 a shirt. I'm not talking about the price. It's not about the price. It's about the fit. It's always about the fit.
I'm not paying more than $25. I'm just saying.
That's why I like Express
when it comes to wardrobe.
Carlos, did you ever go to Express?
Yeah, I get like undershirts and stuff there, like t-shirts, but I don't get like dress.
But Express is expensive. I've been to Express before, but okay, let's talk about an opportunity in the stock market for a squeezing, just like this shirt is squeezing my fucking biceps to be able to make some money. You want to bring this up, Carlos? This company?
I was actually I had posted about. Well, it's not even so much about the short squeeze for me. I'll just pull it up. I posted something this morning before I went to bed.
Bro, you look like you're wearing a carpet. Carp. That's all I needed.
It looks like you're wearing a carpet from Vegas. Let me see. This is it. Yeah. So I posted this morning. This showed up in my feed. Can you share?
Okay. So explain this. Carlos, explain what you're thinking here.
This popped up in my feed today, and I wanted to do some research to see the validity and more to see the underlying analysts that made these predictions. But essentially, it's saying ENVX Corporation, a publicly listed company that manufactures silicon batteries using a 3D cell architecture, is also among the stocks that are attracting significant short interest. In particular, 30.45% or more than 39 million shares are being shorted by investors at the moment, representing a substantial portion like STEM. ENVX is deeply in the red territory this year, falling 27%. So the consensus 12-month price target on the stock is 30.33, so $30 based on 12 strategists. This is what I want to see. The price estimate is 235% higher than its current share price. It's got a buy rating here, which a 235% jump in in stock prices is huge. So when somebody was asking in the chat what I'm buying, if that is the truth, then I want to have as many shares as possible going into that. So I'll probably allocate more of the funds that I've been DCAing into ENVX than I had originally planned. And then I was reading this.
Do you think there's a real short squeeze opportunity on this, though, or do you think it's just...
It's possible, but I'm not trying to play the short squeeze. I'm just more saying the price target of $30, whether it's a short squeeze or not, why are they giving it that? Why are they giving it that price target? Because it's at $9 now. How are you saying that within 12 months that stock's going to triple? So I was reading this thing from Zacks, and if you guys find it interesting, we could just read a little bit of this. ENVX is slated to report third quarter 2023 results on November 7th after market close. So that's in 5 days. We should definitely cover that. In the last reported quarter, the company delivered an earnings surprise of 20.83%. It also delivered a trailing fourth quarter average earnings surprise of 1.29. Thanks to growing demand for its batteries, ENVX has been receiving solid orders for its battery cells in recent quarters, along with the company's continued operational improvements and its first production line must have enabled it to manufacture and thereby ship more battery cells to its producers, to its customers. The consensus estimate is pegged at a loss of 24 cents a share. I'm trying to see why they are thinking that this is, why they're expecting a beat. So I'm still looking around. I'm gonna have to do some research tonight when I'm at work.
Chris, any truth to this narrative that we're looking at? Anything you think there could be a short squeeze here?
There could be, but after reevaluating a lot of like battery manufacturers, I'm not as sold on ENVX as I was earlier in the year, only because there seems to be so many competing technologies regarding this, and like I said, I can't make work of what this company can actually end up doing. So yeah, there's just too much competition in my opinion right now to be like heavily invest in it. In terms of speculative bet on a short squeeze, that's not a bad idea. That's really not a bad idea. You know.
Well, I've got the call options there. I've got the call options there waiting to print.
Yeah. Good luck,
guys.
man.
I think we have some breaking news, if this is right. Yeah, here it is. All right, let's react to it live. See, I have YouTube TV, so we could actually look at the CNBC clip here. Sam Bankman-Fried has been found guilty on all 7 accounts of
Fraud,
criminal fraud counts. Let me pull it up real quick. Let's see if we can get some breaking coverage on that. Let us know in the chat, did you think there was any chance he was going to get out of it? Because a lot of us for a while thought, mommy and daddy would bail him out, or something would happen for him to get out of it. But it seems
the question that we should all be asking is, what is the sentence? Not necessarily if he's guilty. Everyone knows he's guilty. Guilty is guilty. But watch them give him 3 years with ankle monitoring, with home arrest and all this other shit. Because these are white collar criminals, bro. White collar criminals get the club fed treatment, right? So let's see what happens.
And he also made a bunch of important people rich.
Yep.
I got it right here. Let's get a couple minutes of this and then we'll talk.
Yeah.
Any facts, but it's also a good day for justice, because if you're committing that type of crime, you have to serve the time for that type of crime. And hopefully this sends a message of deterrence to other people that think like Sam. It'll be also interesting to see what happens to the 4 executives that have pled guilty already, Brian. It'll be interesting to contrast their sentences to Sam's sentence. But for me, it's a sad day, but I would like to get this behind us and focus on the growth in this extraordinary industry. And unfortunately, like most new technologies, you get some fraudsters in there. We've had them in the railroads, the airlines, the internet. And so hopefully we'll get this behind us.
Yeah. And we look at these charges, 7 charges. And again, not sure what the sentencing guidelines are in each one, but I know all 7 would be effectively a life sentence, a maximum, as you heard Kate say, of 115 years, and at 31. So that is a lifetime sentence. So guys, can we show these 2 covers? I mean, Sam Bankman-Fried was on the cover of Forbes. He was on the cover of Fortune, which, if our viewers can't see it, underneath it says the next Warren Buffett ?
Damn,
just
bro.
the sort of the cult of personality around Sam Bankman-Fried. Everything I've read in Lewis's book so far says he's just kind of this almost Svengali, where he just kind of not bullied, but he just said stuff and he just did stuff and everybody kind of went along with him. Why do you think he was so, to your term, defenseless on the stand? And he did have a hotshot lawyer, Chris Everdell, who clearly didn't do that great of a job.
Well, I mean, listen, you have to work with the facts. If you're a criminal defense lawyer and there's a smoking gun and there's a body and there's 4 witnesses that have already pled out to being your accomplices, you're not Harry Houdini. It was an impossible task. One will have to wonder if somebody writes an aftermath. I'd love to get Michael Lewis.
So basically, we'll see how much. Chris, you think he's getting a lot of jail or no? You think it's?
We'll see, right?
Not.
I mean, he's greased a lot of good problems.
Yeah,
so
that's what I'm saying. I'm not going to. We don't have to get overly political, but the right people made a good amount of money. So I think to me it's just a political theater that he's been found guilty, and it'll probably be a slap on the wrist, minimal time actually served. They'll probably ban him from being able to work in any sort of financial related industry for a while, and no harm, no foul, right? The only people that lost were some investors, but the right people made money.
Maybe he needs to go to Chris's blender. What do you guys think about that?
Yeah, Chris is a little right body blender.
This guy. All right, I think that's it for us. It was one of the best days in the market, so got to get prepared for some bullshit over the next couple of days, or maybe keep this running.
Yeah. Oh wait, is today our final one for the week?
No. Today is it? No.
Yeah, it is. It is the final one for the week.
No, today's Wednesday.
Today's Thursday. Your track,
yeah.
Your track of time is gone, bro.
Yeah,
Vegas really did you in.
That's the Vegas.
What? There's no way today's Thursday, bro.
Yeah,
it is. What do you think?
There is no way in hell today's Thursday.
It's been Thursday all day. when I
See,
went to bed
this,
and when
this
I
is
woke
what
up.
happens, bro.
Dude,
Now you're getting old. He hits 26 and already the Alzheimer's kicking
Right.
in.
He's
Dude, it's been Tuesday all day to me. I thought I had a whole fucking week.
You thought it was Tuesday all day?
Amit,
Yes,
congratulations. Welcome to adulthood. Now you really are a 26-year-old. When you fucking lose track of time so much that you don't even know which day it is, that is what being an adult is. You know? Because all you're doing is waking up, you're working, you're taking care of shit, you're taking care of bills, and then it's like, oh my God, now I got to go to sleep again. You wake up and it's like, which day is it? That's exactly what your life is. Welcome to adulthood, motherfucker.
Are we expecting any?
And then you
earnings?
die.
Any earnings coming up next week? I'm looking around. I mean, aside from ENVX, we're going to be covering that. I'm going to be looking at that. I'm going to be interested.
We had all the major. I mean,
all the major ones are already.
Yeah, let me address something in the comment section. Everyone keeps talking about Epsilon. I will talk about it in Cash Flow Chronicles. Epsilon is still a great company. It is a long term hold. It's a call option. Don't think of it as, hey, I invest in it today, I'm going to instantly see money tomorrow. Like, if that's not what you want, don't touch Epsilon. But I will cover it later. I know that everyone's like, oh, they're dancing around the subject. Like, no, we're not dancing around the subject. Just it'll be covered in another pod.
Yeah,
I just don't care about Epsilon, but KRIS does. That's why I never talk about
it. Yeah, this was yes. On that point, I wanted to make the point. I am not necessarily running around looking for new things to buy. I'm not looking to spread my money around more companies. I'm looking to spread my money around the existing companies and build share counts. I feel like we've got some good, solid play. We've said this for a while. You don't need to have 30 stocks in your portfolio. And if you do, who's got the time to follow that kind of news? I mean, just to keep track on how much money do you have? How much money do you actually have invested? Like a portfolio with 30 stocks in it that have 5% allocation each. I would rather take a higher concentration.
That's 150% correct.
You get my point, right? Yeah. My math is not great right now, but you get my point. Very small single-digit allocations across a bunch of companies is not going to get you those outsized.
Carl's got that margin money, bro.
Yeah, that's true. I'm trying to stay away from, but you get my point. A large number of companies with single-digit allocations is never going to get you the returns as having higher concentration, higher share counts in fewer companies. And people were asking in the chat, I'm currently doing Tesla. I'm doing Enphase. I'm still DCAing into that. ENVX, SoFi, PayPal. What's the other one?
So here's a quick question before we head out. Okay, we've got a few minutes.
Yeah.
When it comes to investing, today I actually told the Patreon people, like, I have certain themes that I'm investing in, and based on what I think is going to happen in the future, I want to find the companies that are going to benefit significantly from that. So like the themes that I'm betting on right now that most of my portfolio allocations are going to is, number one is AI, because you guys clearly see everything is AI. So I want to find the winners among the AI space that I can really make money on. Number two is 5G. 5G I think is going to be a really big deal over the next 10 years. So that's another one. GLP-1 medications. So that's another big area for me. And last but not least, it's in value stocks that have tremendous cash flows that can return that cash flow. So the concept of yield chasing. So those are the four themes that I'm chasing, like that I'm following up on. So if most of my portfolio right now, if I own the stock, it's because it's got one of those four categories that's there. Some of them can be cross together, but for the most part, it's those four themes. And I think that's the key to a lot of people investing. Like, find a theme that you really like, that you understand, because if you do that, the DD becomes really, really easy.
Well, also the DD of a specific sector affects multiple. It sends ripples, right? A lot of times it's a rising tide thing that will lift a couple of stocks in your portfolio at the same time. There's risk on the downside as well. But again, picking those industries that you think long-term over the next year or so are going to do well is a good way of positioning yourself. This is the time. I mean, this is really the time when these millionaires are made, right? This is the time when rich people are made. It's right now when you're investing right now, when everything is sort of low and beaten down, and you're seeing this pent-up tension waiting for, in a lot of ways, the Fed's having the rate artificially low is great, because it's sort of like a game of musical chairs right now, as the stock market sort of trades sideways and is in this extreme fear. Everyone's just trading positions, and then when it's off to the races, it's too late, right? So we might be in this for another month or so. I mean, it's already November. This year's almost over, guys. I'm going to let final positioning your portfolio for what would be like a Santa Claus rally leading into January.
I'm going to let the cat out of the bag, and maybe we'll lose some viewers over this, but whatever. Investing is not about watching and following the market every day. Even though that's what we do, that is not what investing really is. Investing is really just finding a theme that you really like, finding the right company, buying it, and never looking at it for the next 5 years, 10 years, right? I mean, once again, there are times where you should ever so often go back and reevaluate your thesis. But right now, just like Carlos said, there's really not much you have to do to make some exceptional gains going forward. So as an example, let's say you bought a lot of banks after the great financial crisis. You didn't have to buy and sell anything. You made a shit ton of money just holding on to them as they recovered. It's the same thing with all the companies that you could have bought in 2008, 2009. So I think we're under another 7 to 10 year cycle of growth that's coming our way. So, buy the companies that you think that are going to be huge in 10 years and relax. Me, I'm a little bit more of a get in and out in certain industries, but that's because that's who I am. For most people, they should have a passive portfolio where it's filled with companies that they know that they can make some good money with, and then just chill. Right now, my portfolio positioning is to take advantage of some of the mispricing that I'm seeing in the market, but eventually it's actually transition into a pretty much a 75 to 85% just long-term hold and collect, premium or collect dividend portfolio. Because I'm not trying to do this every day, constantly keep looking at my portfolio every other day. Like, no, that's shit. That doesn't work long term. You'll burn yourself out. So,
John, bring up, and then we should go. I gotta go. John, 504. My biggest gains are boring companies that went nowhere for a long time. Exactly. My IRA has just been printing these dividends recently. I'm just holding Boeing in there and Apple, AT&T, CVS, like these boring companies that just keep printing money, keep adding money.
Yeah, there's one comment.
There you go. Anyway, I got a jet, guys. It's been real. I'll see you guys on Sunday. And we'll see you on
Sunday. Thank you, everybody. 440 people. Please like, subscribe. We'll see you guys on Sunday.
Yes,
Appreciate it. And yeah, thanks for joining us.
All right. Bye, guys.
Bye, everybody.